$2 million total available credit limit. What's going on, YouTube? Welcome to the Credit Plug channel. If you haven't already, make sure you hit that subscribe button as well as smash the like button. Also, as a reminder to all viewers and subscribers, this is not financial advice. This is for informational purposes only. So in today's video, I'm going to be sharing with you how you can get a short-term line of credit with absolutely no hard credit check. So for those who aren't familiar with Ramp is a corporate charge card. So this is a fintech type of account. And as you can see right here, I just have a $62,600 limit. If you click on bill pay, right here, they have a new functionality called Flex. So basically, Ramp Flex is a modern approach to a line of credit that you can use to finance your bill payments on Ramp. Now, think of this kind of like working capital, right? So the way it works, you're going to upload your invoice to Ramp Bill Pay. Ramp is going to pay your vendor first, and then Ramp is going to bill you, and you could choose whether or not you want 30, 60, or 90 days to repay. It's not a long-term option. This is going to be for more short-term options, but you do get up to 90 days to repay. Now, Ramp Flex is a revolving limit to help you manage your cash flow. So flex a bill, pay it back, free your limit, and then flex again. Just like a credit card, pay early if you want, or pay automatically at the end of your term. Now, enrolling in Ramp Flex is very straightforward. They're just going to ask you how much do you need to finance per month. And so right here, the minimum, I believe, is $10,000. And then they ask which payment terms do you expect to use the most for financing bills with Ramp Flex. They give you an option of 30, 60, or 90 days. On Ramp, you'll see two different types of limit. One is going to be your business limit, and this is going to be your overall limit between the Ramp card as well as Ramp Flex. Now, it's determined based on a variety of factors, primarily the cash balance in your connected bank accounts, your industry, as well as credit bureau data on the business side. By linking up as many data sources as possible, Ramp is able to evaluate you for the most accurate limit for your business. Besides bank accounts, you can also connect your commerce sales accounts. So if you sell on Shopify, Amazon, if you have a Stripe account, Square account, you can integrate these accounts now for underwriting. Now, this was a feature that originally wasn't available. So aside just from your banking activity, they could also look at your sales data to determine a credit limit for you. If you are onboarded onto Ramp Flex, then you can view your limits at the same time. So you're going to have the card balance as well as the flex balance. So right here are just some examples. Now, here you have your overall balance, and then you have your Ramp card balance and then the Ramp Flex. So these two combined is going to give you your total balance, and then the remaining limit, this is your overall business limit. So your overall business limit is going to be split between the Ramp card as well as Ramp Flex. Now, once you've enrolled into Ramp Flex, then they'll tell you what the latest fees are. So 30 days, 60 days, as well as 90 days. Now, as you can see, the longer the term, the higher the fee. Now, one of the biggest critiques of a lot of these corporate charge cards like Ramp, Divvy, Brex is that you have to repay the balance in full after 30 days. So for a lot of business users, it's not going to give you much flexibility to float those different short-term business expenses. Now with Ramp Flex, I think this is a game changer because it gives you up to 90 days to repay. So that allows you to have your money working in your business for a little bit longer time horizon versus having to repay 30 days. So it's going to give business owners a lot more flexibility, hence the name Flex, right? So you have more flexibility because you can repay it up to 90 days versus 30 days. Now, having that flexibility is one of the reasons why I think fintechs like Capital on Tap have become much more popular than some of the other fintech corporate charge cards, is because it's given business owners more time to repay. So it's going to allow you to do much more in your business. Now, I think Flex is a game changer for Ramp because more business owners will actually be able to utilize the funds knowing that they don't have to pay it back in full in 30 days. They get a little bit more time to actually use the funds and allow those funds to work within their business. Now, just to reiterate, this isn't a line of credit or a loan where you actually get the proceeds. You do have to upload an invoice. Ramp is going to pay your invoice, and then they basically just bill you 30, 60, or 90 days later. Now, one of the other benefits of having a product like Ramp Flex flex, or even working capital where the lender is going to be paying your invoices and then billing you later 30, 60, or 90 days is that you get to maintain a higher cash balance. It also allows you to continue to operate your business without having to worry about your cash flow. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions right down below. And if anyone is interested in applying, I've dropped a link in the description of the video.